Hello and welcome back to DukascopyTV. Now last week, Eurozone powers agreed to a Spanish banking bailout of up to 100 billion euros. Dr. Frank Hollenbeck joins me in the studio today to discuss Spanish banking bailouts. Dr. Frank, thank you very much for joining me. Now many people are frustrated that we continue to bail out banks much as we did in Ireland. Why do we continue to do this?
Yes, they say that, why don't we treat banks like any other business? If Nokia was to go bankrupt, it doesn't mean we wouldn't be able to sell portable phones anymore. So the basic view is that why don't we let banks go bankrupt? It doesn't mean that credit will dry up. And what people don't understand is that it's really deposit insurance that forces governments to bail out banks, in the sense that if a bank was to go bankrupt, the deposits would still have to be the government's liability. Okay, and the problem we have with deposit insurance is that it basically privatizes the gains and it socializes the losses. And when you're in that type of situation, it basically induces commercial banks to take on higher levels of risk than they otherwise would have. Now, a lot of people basically say that it was the repeal of the Glass-Steagall Act, the 1933 Glass-Steagall Act, where we had a separation between investment banking and commercial banking that led to the crisis of 2008. Okay, and they're missing the point. What happened is that when we repealed the Glass-Steagall Act and we opened up investment banking to commercial banks, it just allowed them to take on financial instruments that were even riskier than the financial instruments that they were already taking, which is lending money to the housing sector, for example. Okay, and so the problem wasn't really the fact that we had a separation between investment banking and commercial banking. The real problem was that we had deposit insurance. And you have to understand is that we would not need deposit insurance if we separated deposit banking from loan banking. Okay, there would be no need for deposit insurance. And the problem is that governments are not willing to really do what I'm suggesting. And the reason is because it would significantly reduce bank profits and it would significantly reduce the size of governments, in the sense that we prefer continuing with this totally dysfunctional world economic system that we have than basically deal with the real fundamental problems that we have in our world economy.
Well, Spanish banks, we've seen a great change in Spanish banks over the last couple of years. Just a few years ago, they were seen as something that all the rest of the world should strive to be like. What's changed from then till now?
Well, it's incredible how we forget what we said just a couple of years ago. It is true that in 2008, 2009, Spanish banks were actually put as the model for the world to follow. And Spanish banks were following a regulatory requirement established by the Bank of Spain, which was called dynamic provisioning. And Spanish banks implemented dynamic provisioning in the year 2000. Now let me explain what dynamic provisioning is. It's basically a rainy day fund, in the sense that you take money from when you're making profits to basically support you when you're not making profits. And the basic idea is that you understate profits during the good years to use those profits into the future. The problem with this is that it basically masks the problem that Spanish banks really had. And once these reserves disappeared, we were able to actually see how bad the situation in Spain really was. Okay? And the thing we've learned is, like in the case of the United States or in Great Britain, it's better to deal with a problem early than late, in the sense that the US was able to deal in 2008 with its banking problem, and so did the UK. Now what we have in Spain is the problem is maybe 10 times worse than it was in 2008. So even though dynamic provisioning looks like it reduced risk, it actually has increased the amount of risk that Spanish banks and Spanish depositors are bearing.
I see. So rates in Spain have been getting gradually higher and higher because of the Spanish banking bailout. Will we see this to continue, do you think?
Well, like I said, we're heading for a train wreck. The thing is that we can actually see the cliff at the moment. And if Spain gets shut out of the financial markets, then for me it's game over, because there's simply not enough money to bail out Spain. If it's closed out of the financial markets for a couple of years, that's way beyond the amount of money that we have. And the only real solution for me will then be to print money. We'll have some type of Lehman type of event, and this will force the ECB to come in and print money, and that just means hyperinflation into the future. So all I have to say to your viewers is that plan for hyperinflation, because it's coming.
Okay, Dr. Frank, thank you very much for joining me today. That's all from Dr. Frank and the Dukascopy team today, but click back to the website for more updates. Goodbye.